thank everybody for being here. I know that your time is valuable, and we're going to try and give you as much information as we can today in as a little amount of time. So what we're talking here about today is financial wisdom. And we've got a panel of experts. Here's what you can expect. We've got a panel of experts that we're going to be talking to. Can you all see my screen? Yes. Okay, cool. We have asked each of them to talk about 3 of their most asked questions that they get from their clients. And so we're going to go through each of the panelists with their top 3 questions that will prompt questions for you. So as you guys have questions, send them to me in the chat box, because we're only going to have time for limited questions at the end. We're going to get through each of the panelists, each of the areas. And at the end, we'll take all of your questions as time permits. We should have maybe about 20 minutes. So we'll take those questions, we'll open it up to the panel board, and each of them will volunteer to answer it. We will complete in 1 hour, so you can move on with your days. If you want to talk with the panelists or network, we will hang out for 10 minutes after to give you an opportunity to connect one-on-one, exchange information, etc. Cool? Give me a thumbs up. Okay, awesome. Thanks for being here. I commend you on taking your business head on and being here for it. So our first panelist is Sarah Foley. And our first question for Sarah is, what are some key financial tips for success?
My most important financial tip for individuals is to live within their means. It's so easy to spend money nowadays. $28 a day comes out to just over $10,000 a year. And so it's so easy to spend money that a lot of people end up spending a lot more than they make, which just causes a catastrophe for all of their finances and just leads to the cycle of debt. So honestly, it's not that exciting, but keeping a budget and making sure that you're living within your means, no matter what your income level is the most important thing that you can do. Jessica, you're muted.
Thank you. That was a great tip that you gave. Can you please give me that statistic again?
$28 a day comes out to over $10,000 a year. And it's very easy to spend very easy to spend $28 a day.
Yeah. Great. Thank you. I know the number 2 question you get asked, why is life insurance important?
Every family and every individual's financial situation and their lifestyle and the way that their family lives and survives is all from their income. And that's what supports everything in their family, everything in their lifestyle. And what happens if that income goes away? And so the biggest, most important reason why people need to get life insurance is for income replacement for their families. It also helps with funeral expenses. We all see those GoFundMe pages when there's tragic accidents. It also helps with medical bills and debt, and helping set up that generational wealth for families as well, and truly creating a legacy, because we all work very hard, and making sure that you set yourself up for future success and that your kids are set up for future success as well.
And number 3, why should you prioritize investing for retirement?
I see a lot of people who think that they can just start saving later. And people tend to underestimate the value of time when it comes to investing and saving for retirement. Saving for retirement is all about setting your future up for success, so that one day when you're decided that you no longer want to work, or that you're ready to live off of your income, if you haven't been saving for retirement, you're going to have to keep working, or you're going to have to significantly change your lifestyle. And it's something where retirement, the earlier you start, the better. The longer you have time to save, even if it's just a small amount every month, and the more the money has time in the market to be able to grow, to create that nest egg that you really need to live off of for retirement. And a lot of people think, well, I'll start saving for retirement when I have $5,000, $10,000. No one's going to talk to me if I only have $1,000 or $100 a month to save. But you have to start somewhere. And even if that is starting small, it's important to start saving now as opposed to later.
It's so true. A penny a day doubled every day for a month is $1 million. All right, awesome. Thanks, Sarah. You've got her contact information there if you want to connect with her. I know some of you already know her. Our next speaker is, I'm having a major delay. Josh. Thanks, Josh.
Yeah, just in the nick of time too. I definitely had a computer crash right when we got started, so I'm glad I could sneak back in.
So I know you work in a similar space as Sarah, but it was interesting to see the different questions that you guys get and that you handle. And with so much information and so many opinions out there, what's someone to focus on first?
Yeah, one of the things that I tell people is, no matter what situation you're at, the number one rule with money is don't lose money. Don't waste money. You work too hard to have that, and it's usually a good place for people to start. They might be paying too much in interest on things that they have. They might be paying too much in taxes. They might have bad investments that they're in where they're losing money, if they've got something started. And so you want to address those areas first and make sure that no matter what you're doing, we're not going backwards by any means. And then kind of like what Sarah alluded to a little bit, just get started, get something going, even if it's a little bit. If you sit down and look at your whole financial picture, there's probably money you can find that you're losing or missing out on or spending too much on something else. That'll help get you started, right? Everybody's worried about the home run investment. Start with where you're at and make sure that we're not losing anything. And another big part of that too is insurance. Nobody likes it. Nobody wants to talk about it. But you want to make sure that in all those different areas, you've got enough coverage. You're doing enough in those different areas so that if you do come across an issue, you're not going to go way backwards. Some of that stuff can be catastrophic and ultimately life-changing. You don't want to run into those things. So look at your situation first, see where we can find money, and make sure that we've got good defense as well in place.
Yeah, I love that. How much do I need to have in order to retire? And how do
I
I
like
get
this one because everyone just give me the answer. And as everybody can imagine, kind of the cheap cop out for me is it depends, right? Everybody's different. Everybody's got their own unique situation. A young single person versus somebody who's a little bit closer to retirement with a family and their own business, it looks different than what, everybody else has. So kind of shameless plug, you have to talk to people like me, talk to people like Sarah, talk to these other great people in their industries. We're going to sit down with you and look at your specific thing. If you just Google how much do I need, or look through social media and you've got, you just need $1 million. Yeah, just, multiply your income by 5.86 divided by years. It's just that stuff doesn't work. The cookie cutter stuff on the internet isn't going to cut it out. So you really have to sit down and dial in your specific situation, your specific needs, your preferences, and get to that first. So come talk to me, come talk to Sarah, come talk to the other people. We'll be able to get those answers for you.
And one of the things I have to share with the audience is that this group of panelists, if you guys have something in common, it's that you really like to work with small businesses and young entrepreneurs and people who don't have it figured out. Many of you have shared your passion about educating people and helping people, and some of you even giving back to people in your same space. And that's huge. That's huge. And I appreciate that about you guys. What is the biggest risk out there and how do I avoid it?
Yeah, I think, everybody knows about market risk. There's real estate market risk, there's stock market risk. There's always that out there. One of the other things that we try and put an emphasis on when we talk to our clients is, the risk of not knowing what you're doing, right? Not having the knowledge and the understanding of what you need to be doing, the strategies that you can have in place to, make your money grow for you or do different things that you need. People are losing money just because they don't know what to do, right? So there's a huge risk of not having the knowledge that you need to go out there and win the game. Some people just kind of throw things at the wall and hope it sticks and they lose money, right?
Mm-hmm.
That's a huge one as well. And then one that, again, people don't think a whole lot of is legislative risk. There's a lot of things out there that the government, has their hands on. They can change the rules down the road. They can overstep. They can interject in certain scenarios where you're trucking along and then things change, right? And you might not have been prepared for that. So there's things out there where you've got less government involvement, less, potential risk for those kinds of changes. And people need to know what those are and make sure that they're, adequately positioned in a bunch of different areas where they're going to be able to avoid, those major risks.
That's a great tip, Josh. Thank you so much.
Yeah, thank you.
Okay, next up, we're going to talk a little bit about the residential market with Justin Gray. Justin, thank you for being here.
Thank you.
I know you get this question all the time. Is it a good time to buy a home considering the current market conditions?
Yeah, and it's a great question. And it's twofold too. So, I mean, there's people who don't own homes currently, and then there's people who already own homes or are building a portfolio for investment. And so my answer is always to everybody that I meet with, it depends on the person and where they're at financially and if they can afford it. But it also goes back to, I think you should always invest in real estate. For those people just buying a house for the first time, the sooner that you get into a house, the sooner you can beat the appreciation and the quicker that you can start to develop and build wealth. So the average renter in the United States has a net worth of between $5,000 and $10,000. And currently with the current market, the way that it is, it's probably actually decreasing on that due to inflation and how much everybody's having to spend on everything versus the current homeowner that actually owns real estate in the United States has upwards of 200,000 or more as far as what their net worth is, just because they own real estate. And the majority of people, especially the top 10% of people in the United States, the wealthiest people, a good majority of their net worth comes from real estate holdings and not necessarily from investing in the market. So it's really smart to be able to invest in both. But I think real estate, you should buy real estate as soon as you possibly can and as soon as you are able and ready and willing.
Thank you. Will I be able to afford that monthly mortgage payment now and in the future?
And that is why you come to a mortgage professional and sit down and kind of determine whether or not you can do it. So if you're able to afford it now, and that affordability comes through sitting down with your mortgage professional and figuring out, what your monthly budget is for rental, if you have to pay down debt, whatever that looks like, and you can afford to be able to pay that mortgage payment, now is a great time to do it, because if you can afford it now, you're going to be able to afford in the future. Because worst case scenario, rates drop and then you can refinance and it'll become more affordable.
With interest rates where they are currently, am I making a wise investment, or should I invest somewhere other than real estate?
My personal opinion is you always invest in real estate. We have a very unique market right now, and I think it's an excellent time to invest, especially with rates a little bit higher than they have been the few last years. With inflation going up, it has driven interest rates up. And most people don't know this, but interest rates follow inflationary numbers. And so when we hit 7% in inflation, we saw interest rates go up to about 7%. And that's why you see them dropping down now, is because the inflationary numbers are going down. And so the interest rates are kind of matching that. The 12-month over 12-month average is coming down to somewhere around 4.9 on inflation. So we're going to see interest rates drop probably somewhere in the mid fives here in the next couple of months. And with that, it creates a really unique opportunity currently, while people are still sitting on the sidelines waiting for rates to drop down, to get in front of kind of the massive surge of home buyers that will happen as soon as rates go down. So, July, August, when rates go down to mid fives, it's going to flood the market with more buyers who've kind of been holding off and waiting for rates to drop and for the housing market to kind of soften. But if you get in ahead of time right now, when there's not that many buyers, it's a perfect opportunity to capitalize on some of those houses that have been sitting on the market for a little bit longer, because interest rates have been so high. get in, and then you can just refinance
Mhm.
once rates go down.
I love it. Thank you, Justin. We've got his contact information. There'll be lots of opportunities to connect with the panelists. Next up, we have Profit Coach Leanne Ozane Smith.
Hi, Jessica.
Hi,
everybody.
Leanne. Thank you for being here.
Love it. So when people come to see me, it's because they have the knowledge that there's something not right with their business finances. They feel it, they see it in their bank account, and the number one question I get asked is, how do I get organized with my business finances? And I kind of say this tongue in cheek because that is the wrong question to be asking when those symptoms are showing up in your business. I equate it to you're not struggling with your finances because you're disorganized. Your finances are struggling because you're, as a business owner, disoriented a lot of times because we don't understand the difference between cash flow and what we should do with money coming in and money going out of a business, and tax strategy, and all of the things in between, from bookkeeping to record keeping. And so when we're stuck in what I call the financial fog, people really believe that just organizing their finances is going to solve the problem. But when you're disoriented and you don't know what direction to go, that's not going to be a solution. And so what my best advice is, anytime somebody asks me this question, is to really just take a step back and ask yourself if you're trying to solve a financial problem for your business with the wrong strategy. You can't solve a cash flow problem with a tax strategy. It just doesn't work. You can't solve a cash flow problem with thinking your way out of a box. There actually has to be a hands-on plan for what to do with money so that you get a different result. And so that isn't about organization. It's about a completely different mindset and perspective. And I could go on and on about that, but I only have 5 minutes. So that is my most asked question. And also just want to leave off that question with the encouragement that if you are somebody who feels disorganized with your finances, or you know that you're stuck in some financial fog and you're actually disoriented, I just want to tell you, you're normal. It is super, unfortunately, it is just super commonplace for business owners to carry a burden about what's going on financially with their business and feel like it's only them. And to look at everybody else like on this call, like, oh, they've got it all together. Their business is growing like crazy. And so it's easy to stay isolated. And it is hard when you're in that place of feeling disoriented, or profit's not there, or you don't know why your bank account is emptying faster than you feel it. As a business owner, that's really hard to have a conversation with a CPA who might be judgy or preachy, or not that any of our lenders on here are disapproving, but it can be hard to talk to a lender or even somebody like me who helps people with their finances. So my encouragement is, if you feel that way, just remember you're not alone. It's totally, completely normal, but you are alone as long as you keep yourself alone. So
should I be an LLC or an S Corp or a sole prop?
Well, you're already a sole proprietor unless you decide to be an LLC or an S corporation. Rule of thumb with that is that when I see a business or business owner that's crossing that threshold of 6 figures, it doesn't usually make sense unless you have at least $100,000 of gross revenue to actually go down the path of an S corporation because of what you'll pay to have 2 tax returns done. But if you're crossing that line, it makes a lot of sense to explore an S corporation so that your company can actually pay your self-employment tax. And we can put you on payroll, and we can kind of simplify how we pay you as the business owner, including matching for retirement contributions and things like that. So an LLC and an S corp, an LLC and a sole proprietor are basically the same thing in Washington State. The difference is an LLC really just creates a legal shield of liability protection from you and a customer should someone sue you. So a lot of people think that an LLC is what legitimizes their business. That's absolutely not true. You do not have to open an LLC or an S corporation to be a straight up, legit, and profitable business owner.
Thank you, Leanne. So that was $100,000 in gross revenue in a calendar year, and you should start talking to somebody about S Corp status.
Absolutely.
And how do I pay myself?
Oh, well, let's start with how you don't pay yourself. You don't pay yourself through soft comp, which is, I don't really know how to pay myself, so I'm going to use the business credit card to buy things for my family and my personal life, like groceries or concert tickets. We don't do that. What we need to do is actually figure out what your minimum viable pay is. In other words, what do you need to make? And we reverse engineer that in a way that you can see what you need to extract from your business. Because if you don't, your business will consume every single dollar that it makes. And if you've been in business for any period of time, you know what I'm talking about. We get so focused on investing in our business and growing our business that we forget to pay ourselves and take care of our livelihood. And so I think paying ourselves is the most important investment a business makes. And I think it's one of the first things you need to do every month. And so IRS does not like it when we say, oh, look, I'm going to pay myself money and I'm going to transfer money from my business bank account to my personal bank account. They don't like that because it can expose your family to personal liability and an audit. So the best practice is actually to write a physical check to yourself or use bill pay out of your bank account and actually get that money out of your business instead of hoarding it in your business bank account or waiting for the perfect time to pay yourself, and so start paying yourself a minimum viable paycheck.
Thank you, Leanne. Those are some awesome tips. All right, next up, we're going to talk a little bit about business credit. Lots of questions came in the world of business credit and financing. People are confused. So Thomas Comstock, thank you for being here today. I've been in business for 7 years. Why am I being declined for business loans? You're on mute.
That's a really good question. I think that the simplest way to say that you're getting denied is that you haven't taken the time to build proper credit for your company. A lot of people, when they start companies out, they're bootstrapping everything with their personal finances and they're commingling funds with their social security number being tied with personal guarantees. And once that kind of gets tapped out and you're over leveraged with your personal credit, you're going to start being declined loans for your business.
I've never missed a payment and I've paid back multiple loans. Why is my credit score still so low?
And that goes back again to being tied to the personal credit score. So if I take out a loan and say I'm buying a piece of equipment for my facility and I pay that loan off, but it was tied to my personal credit, it's not being awarded, or the credit's not being awarded to the business. So the next time I go to get a loan, the business still doesn't have the business credit built up. Then they're going to be denied a loan and you're going to have to personally guarantee, which starts the cycle all over again.
So what is the best way to separate personal credit from business credit?
Like, again, building that EIN's credit. There's a big misunderstanding about how business credit works. A lot of people take the personal credit system and they apply that logic to the way the business credit works, and they're completely opposite. Things like the debt to income ratio and utilization rates don't apply when it comes to the business side of things. They want you to use as much money as you can. So to be able to get to the point where a company can ask for $100,000, $200,000 for growth or expansion or payroll when they're hitting rough times, they need to start small. They need to start with $1,000 trade line account here, a $2,500 trade line account there, pay those off consistently to build it up. It's just like when you start building credit when you're 18 years old and you get your first $500 credit card. You want to make sure that history is being built up so that the banks look at the business as EIN's credit and say, the last 2 years, you've been paying everything off and it's been in a slow incremental gain. You've been using all that money that we've been awarding you. We're going to start giving you more money because you've been proven that you've paid it all back.
Awesome. Thank you, Thomas. Lots of information. All right. Next up, we're going to talk about business loans with Jessica Langman from Numerica Credit Union. Thank you for being here, Jessica.
Hi.
What are the qualifications for a business loan today?
Short answer, like Leanne, I could go on and on about all of these questions, but one of the first major things is you need to be an existing business. Chris will talk about startups, but for traditional financing, you need to be in business for at least 2 years, because we're going to collect your financials for the business and your personal financials. And so we want to be able to look at historical trends when it comes to revenue and profit and expenses. So that's a big one. You need to establish your business before reaching out for lending most of the time. The next question we're going to ask is, what do you need the loan for? What's the purpose of it? Are you purchasing real estate? Are you buying equipment? Do you need an operating line of credit for working capital, such as payroll expense? And what you need it for, it needs to match what type of business you have. And then the fun part, or the not fun part for a lot of people, is the numbers, what underwriting standards we have. And at the end of the day, we're going to make sure that income you have and all the expenses, and you qualify for the new debt payment for the loan that you're asking for.
And what kind of down payment do I need?
This is a really common question, because a lot of people, this might be their first business loan that they are looking into and have no idea. And all they're used to is personal financing, whether that's a car loan or a mortgage. And business financing is just a different beast for sure. And so where on the personal side, you can get away with little to no down payment on things, on the business side, depending on the type of loan you're going for, you'll need as much as 20 to 30% sometimes. It varies based on the loan that you need. So if you need like an equipment loan, you're going to look, and if it's new equipment, it's going to be closer to 20%. But if you need real estate and it's maybe a special use property or retail, or there's all different kinds, you're looking closer to 30%. So I always say, especially as a new business, it's extremely important to save for these things, for this down payment on whatever you're utilizing to grow your business. So your liquidity, aka cash position, is important that you need to plan for.
And what are your terms, including rates and fees?
Yeah, again, this is going to look different from a lot of personal financing situations. And it is going to depend on the type of loan that you are applying for. For example, a real estate loan, usually, and this is pretty typical, every institution is going to have different standards across the board, but generally the term is max 10 years. And then depending on the type of real estate, the amortization will be 25 years. So you have a lower payment, but it's all going to come due in 10 years. Equipment is going to be based on the type of equipment that you're trying to finance, how old it is. So terms on that could be 5, 7, 10 years again. Fees are vary as well. It just kind of depends, but most likely you're going to be responsible for all third-party fees. Could be in title insurance, recording, UCC filings, and then there is a loan fee on top of that, and that can vary per lender, but it's usually around 1%, give or take. And then the rates, that is always a super fun topic, she said sarcastically, because it is tied to the market. Everyone on here will be able to relate to this. Rates are high compared to where they were a year ago or a couple years ago. We've had extremely low rates because we have had super low inflation. And now, just like Justin was talking about, it's increased. So depending on the type of loan that you need, it could be fixed or variable. And it's going to depend on the market. So my advice to anyone that needs a business loan is reach out to your lender, and you should be able to ask all these questions. Like, don't be afraid to ask questions, and you should be able to have open communication with your lender and financial institution, because at the end of the day, you need a trusted partner and advisor, and you should be able to have open communication. So, because all of this stuff it varies per you, per your business, per institution, per everything.
Thank you so much. That's some really great information.
Thank you.
Lots of questions around that. All right, next up, let's talk about some SBA lending with Chris Pitts from Northwest Bank. Thanks for being here, Chris.
Thank you. Woohoo, SBA lending. Yes.
Yeah. So can you tell us what the main differences are between conventional and SBA lending?
I feel like Jessica hit a lot of these for me, but I would say the biggest thing with SBA is SBA is open to higher risk loans. So where conventional, you're looking at 20 or 30% down. SBA, you're looking at 10% down, and we can actually percent loan to value depending on the circumstances and what you have for collateral. And we do a lot of deals where people only put 5%. It's a huge difference between commercial and equipment loans of so we go out, we'll fully amortize 25-year loan on real estate. We do 10-year on equipment for SBA. So those are, whereas you'll have a balloon payment on a traditional loan, you'll have a full amortization SBA loan.
And how many years do you have to be in business before you can get an SBA loan?
My favorite thing, you don't have to be in business before you get an SBA loan. So you have to get all your business paperwork, and all SBA lenders should help you with this. But we helps all the time. And that's one of the things with SBA is it's a government backed program. And so the government is encouraging the bank to lend money to higher risk new businesses versus a traditional loan where the bank or credit union they own a loan on the secondary market. So really more of a brokerage service for banks than it is traditional.
Okay. Is Chris cutting out for you guys too? Okay, you're cutting out. It's hard to hear everything. We're missing some of your statistics.
Let me see.
And can SBA be used for startups?
I'm going to try turning off my video here. Helps. Sometimes that'll make it better on the internet connection. Is that better?
Yeah.
Yeah. Yes, SBA is for startups. I would say probably 80% of the loans that we do are for true startups that are projection-based companies where they literally have never done any business in the field that they are working in. And so we start with 2 years of project company. Obviously we have great people and business coaches that we send people to for those startups, but we absolutely can do an SBA for multiple SBA programs for startups.
Okay, awesome. Thanks, Chris. And last but not least, we have our attorney, Marissa Alla with the Alla firm. Thank you for being here, Marissa.
Yeah.
So lots of questions in your space as well, too. So we'll dive into these three and then we'll open it up to Q&A. What is an estate plan and when do I need one?
Well, it's interesting that I'm last on the panelist list here because it's often the item that everybody thinks of last when they're dealing with their financial planning, when they're dealing with businesses and business planning and lending and so forth. People don't always think about coming to talk to an attorney about their estate plan as one of the first steps. It's typically one of the last steps. So to answer the latter part of the question first, you need an estate plan right away. You're already creating an estate plan, whether you know it or not. So an estate plan is essentially starts with a set of documents, be it a will, a trust, powers of attorney, medical directives, you name it. Those are the documents that are part of an estate plan. But an estate plan, like a financial plan, is a really big picture look at all of your belongings, all of your assets, your businesses, your debts. It's a big picture look at all of that and saying to myself, how am I going to leave a legacy for my family? What am I doing for the people that I'm going to leave behind? And how am I going to pass it to them effectively and intentionally so that there's not a significant burden on my loved ones when I'm no longer here?
I thank you. That is, yes. What is the difference between a will and a trust?
Yeah, I put this question down on here because it's a very common question. What is the difference between a will and a trust? Both a will and a trust are documents that are designed to tell the people we leave behind what we want to do with our assets. You know, we typically think of a house and we say, okay, I want my house to go to my wife, and then I want my house to go to my kids. Or maybe it's preserving a family vacation home. I see a lot of clients that have lake homes and they want to know how is it best that I can pass that on to my kids. So the primary difference between the two documents is a will is something that nothing happens until we die to actually take effect. Everything has to be done once we pass away. All of the title transfers to the home, all of the just all of the work that needs to be done in handling someone's estate happens after we die with a will. And it often has to go through court, through probate. But a trust has so many advantages to it because you do a lot of that work now. You transfer title to the houses into the trust. You transfer all of your assets and you coordinate it with the trust. And the best thing about that is that there's so much less work for someone to do when you're gone. It's already been done. You've already taken care of all of the fine details to leave your stuff behind, and you get a little bit of more control over it. One last piece is that you can really take care of minors through a trust. You know exactly who's going to be managing those funds if you have young children. And say you have a lot of life insurance coming into the estate and you need someone to manage those funds. A trust is what does that for you.
And how do estate taxes work?
Yeah, state taxes, everybody's fun question. In Washington state, it's important to know that we have a pretty low trigger for estate taxes. So an individual that owns assets of more than $2.193 million right now is subject to possible estate tax. There are a lot of exceptions, marital exceptions, and so forth. But it's important to know that it's fairly low. IRS, on the other hand, federal estate taxes don't kick in until about almost $13 million now. So if you live in Washington, you really need to be careful when you own businesses, you own real estate investments, you need to be careful about how you're planning to make sure that your estate is not taxable. It's a significant amount that Washington state taxes if you go over that amount. And I, as a lawyer, can help you with that.
Yes, yes. Well, I mean, all of you are just, you're in this group, you're vetted, you're trusted in your areas. And so that's why you're here. You're professionals, and I'm excited to work with each of you. We have some questions. Let me go to the chat and see if we have any live questions. I have some. So with these, I'm going to ask the question, and if you would like to answer it as a panelist, just go ahead and raise your hand. And we'll kick it off with, how do you decide whether to manage your own finances or outsource it? I know a lot of us, we come to this pathway as a business owner, even if it's something that you enjoy. So how do you decide whether to manage that or outsource it? Leanne, I see Leanne.
The primary thing is, if you're good at it and you like it and you have time for it, knock yourself out with QuickBooks. If those three things do not apply to you, hire a bookkeeper. No questions asked.
I couldn't agree more. I couldn't agree more. It's one of the
Don't
very
waste your
first thing
time,
I do with
people.
clients is on roll a bookkeeper.
Yep.
Justin?
So kind of echoing Leanne's, I mean, most of us are not trained in multiple facets of job proficiency. So I outsource everything because, I have two different investment managers that invest and that manage my investments. When I'm selling a house, I always use a real estate agent.
Mhm.
And the adage is, I mean, like in real estate, there's a lot of people who try to do for sale by owner, but the statistics show that you make 10% more selling your house with a real estate agent than you will for sale by owner, even saving the 6% on real estate costs. And the same thing goes through all different businesses. So that's why I don't do my own finances and I let the professionals who are in it every single day manage my portfolio, because I make more money focusing on my job
Mhm.
than I would trying to do that. And that would take away from me being the professional that I am, doing lending and providing that services and trying to manage all of that where I'm not that good at and I don't have that proficiency. So
I think people think, Leanna really hit the nail on the head there. They think if it's something that they're capable of, they need to do it, but they really do need to be looking at their time and where it's well spent, right? Like you're alluding to, as someone who also enjoys it, I outsource it myself, as do you, coming from the lending world.
Yeah.
So don't beat yourself up if you're outsourcing it, even though it's something you know how to do. If your time is better spent as a business owner, if you figured out your ROI on your time and your hourly rate, like this is what I'm up to, this is what I'm worth, any task less than this, I'm outsourcing.
Yeah. And in my DNA, I'm built to do everything myself. So I have an extensive background in construction. So, my wife gives me a list and she's like, we need to do all these things. I was like, I'll just do them all. I'll build the table. I'll build the shed. And she's like, that doesn't make any sense. You need to be focusing on your real job where you actually make money, and rather than spending 40 hours at home, doing honey-do lists and doing construction projects. Even though I like it, it's not my best use of time.
Yeah. Sarah Foley.
I just wanted to quickly say, Vanguard did come out with a study a few years ago that in regard to financial investments, statistically, if you work with a professional, you make about 3% more year over year, which compounded over time can have a huge impact on your investments.
Thank you. Chris Pitts.
So from the lending side, I would encourage business owner to have someone else manage their finances. We consistently see, and I'm sure Jessica will support this, where a business owner is months behind because focus their business. By the time they come into the bank and they need to get a loan or obtain credit, they really struggle.
And by the way, the bookkeeper that you onboard is going to charge you to go back and clean it up anyway. So it stresses you out for years, and then you've got to pay to get it fixed anyway, versus just onboarding somebody and having it handled and getting actual sleep at night, because that is a big contributor to why business owners aren't sleeping. What are some common financial mistakes small business owners make and how to avoid them? So we all have made mistakes in our businesses. There's a million things we would do over, just even in the last year. Even if you're a seasoned business owner, there are mistakes you have made in the last year, things that you would do over. So as a professional, I want you to share some common things you see people doing, business owners specifically, and what they can be doing to avoid them. Leanne.
I sure have made plenty of mistakes. I want to start by saying that. I think the biggest mistake I see people make with their cash flow, their business money, is not understanding that not all money spent on a business is actually a good investment. Any more than we can say that any investment I've made in the stock market or whatever is always a good investment. It may always have good intentions, but it doesn't become a good investment. And so business owners have this mindset that our entrepreneurial DNA is to just grow our business and to make it happen. And so we end up investing so much more money back into the business, putting ourselves in entrepreneurial poverty, by the way, a lot of times, but investing and investing and investing, hoping that at some point, if we just make more money, that profit is going to show. And that isn't how it actually works. One of the biggest mistakes we make is actually treating all dollars spent as equal, when in reality, they're not. And it's one of those things with business decisions and money spent that we need to learn to fail quicker and go, yep, that didn't work, and forgive ourselves and move on. I could go on and on, but
I
other
love
hands
it.
are up.
I love it. Marissa?
Let me unmute. So what I see is people that come in that don't have good contract documents, good documentation with their client, be it just an invoice or some kind of document that defines the terms of the relationship between the business owner and the client. So that's huge. And then number two is not having good documentation for the actual type of business you have. So as Leanne spent some time talking about, whether you decide to be a sole proprietor, an LLC, or an S Corp, there's documentation that comes along with that. So if you have an LLC, for instance, you should have an operating agreement. And I've gotten cases from business owners who have gone into a partnership together and they didn't properly document the relationship, the terms of their partnership before they started, and it has caused significant financial distress after the fact. So very, very important.
Who knows a partnership that's gone sideways?
Yeah.
Yeah. Very, very important.
Hugely important.
Jessica.
I'll piggyback on what Leanne was talking about with growth. The phases of a business are startup, growth, and then maintaining. And after the startup, you get going. And then exactly what Leanne said about you think the more money you're going to make, the better. What a lot of business owners don't understand is you need cash to grow. You have to have cash to grow. And what happens is you keep taking on all these contracts, whatever it may be, and then you don't have the cash to support them because you're fronting a lot of the costs up front. And so I see a lot of businesses come in for financing at the point where they have negative cash flow, and it's really hard to finance a business with negative cash flow. So being really thoughtful on how you're growing and not just going like gangbusters on it. Like you should be really thoughtful and understand where your cash flow is and understanding the cycle of it too, to be able to know what you can handle. I think that's important.
It is, and it's a great segue into the next two questions. What are some financial metrics that small business owners should be tracking to better grow their business? So you've got your QuickBooks, you've got your information. What do you guys want them to be looking at? What should they be focusing on? Jessica?
I'll just mention a couple. I will say from a lending perspective, we look at a lot of different ratios because the ratios do tell a story about the business, but some simple ones that a business owner could, measure themselves is your current ratio. It's your current assets divided by your current liabilities. And at the end of the day, that is your operating. How are you operating? Do you have enough current assets that include cash, inventory, accounts receivable to pay those other current liabilities, which is your vendors? How are you, can you get more inventory kind of thing? So that's it. I feel like an easy one to monitor. And then just understanding your balance sheet in general. A lot of business owners don't think a balance sheet is super important because they're so focused on the profit and loss statement and how much money am I making and how much profit, my bottom line, when in reality, the balance sheet that covers your assets, liabilities, and net worth tells the entire story of how you're running your business. So if you don't understand that, that's okay, because it is super confusing if you don't have a background in it. But that's probably one of the reasons you'd reach out for professionals, because from a lending perspective, we are looking at those things.
Marissa?
I was just going to add on to what Jessica said about the balance sheet, because it reminded me that if you're not using a good bookkeeper, you probably don't have a balance sheet. When I was doing a lot of my own accounting, I didn't keep a proper balance sheet But now that I outsource and keep a bookkeeper, she updates my balance sheet and my profit and loss every month. And so just another reason to consider outsourcing finances.
Yeah. I would add in here, your profit margins, because lots of times business owners aren't aware, if you have a 4% net profit margin, that means you make 4 cents for every dollar that you make. So they see the millions in sales and revenue and they don't understand. And so I often start there with clients, looking at profit margins and looking at industry standards and having them get really clear. The average net profit margin for a small business owner is 10%. All right, we've got a question. What is the best money you ever spent on your business? It's a good question. I'll kick it off. I am someone who likes to work with a coach, a rigorous coach that will hold me to account for what I'm up to. And when I meet with them, I typically give them my tells, and I tell on myself up front, because if I'm going to pay for a coach, I really want to get the experience from it. I'm really trying to level up. And so I like someone to really call me out on my stuff. And there's never been a time that I've had a coach that I've thought, gosh, that was a bad decision. Justin.
So as a mortgage lender, we don't necessarily, depending on where we work, have to spend any money. I mean, the company covers a lot. But I think it's extremely important, if you want to succeed, that you invest in your business and yourself every year. So I set aside 10% of whatever my earnings are every year to reinvest in my business, whatever that may be. I do use a coach. We use some marketing stuff, co-branded marketing. We send out tons of client gifts. I have multiple subscriptions that I use, and every year, 10% of whatever I make just get set aside to reinvest back into my business to be able to grow my business. And I use that money every year. So at the end of the year, I have it there. And then we do our business planning with my team January, February, and decide where that money goes. But if you're not reinvesting your business on a regular basis, then your business is going to stagnate and it's not going to grow. And so it's extremely important to be doing that, in my opinion, every year.
Marissa.
I just wanted to note that technology is super important. So whatever business you have, using the correct and appropriate technology is so important. Be it, in my case, client management software that is specific to lawyers that can help me manage, where my clients are at in the process. Before I had that, you're kind of just relying on memory, or you're relying on notes, and that's not great. So some people use CRMs, some people use other software, but technology is super important.
Leanne.
I actually can't believe I'm going to say this. I'm shocked, but I actually think going and spending the $5,000 to go to the Story Brand workshop when it was in Seattle was one of the best investments I've ever made. And the reason I'm shocked about that is that I generally think that paying marketing people is a waste of money because they don't deliver. And so to kind of tag team that, what I love about that investment is it actually put me in a frame of mind about what we say about our business, how clearly or not clearly we communicate it. And I especially since I deal with people's business finances and their habits around money, that's really hard to talk about. So I feel like getting that messaging correct and having experts tell me, say it like this, not like that, was one of the best investments that just continues to pay me back. So good, even though it was marketing.
I love it. What is the best way to forecast revenue and expenses? Leanne.
I don't want to hog the mic.
Oh, you're fine. Yeah.
Just right in my wheelhouse. Best way to forecast revenue and expenses is actually to recognize that you're in two lanes at all times as a business owner. You are in the lane that's moving fast north, and you have a rearview mirror looking behind you. And so when we understand that when we're looking at QuickBooks and our income statement, we can see where our money went, right? That shows us historically what's behind us. And we already have the result of the money we made and the money we spent. Result is had. So when it comes to forecasting and looking at expenses, it makes a ton of sense to pull your P&L and ask yourself, okay, where did my money go by category? And to actually ask yourself, do I see ROI with this, or is it negative ROI? Let's be honest. I had fired my marketing firm 4 months ago because I had negative ROI with them. Negative. I was like, okay, I'm done. I need to fail faster here, right? But we sometimes don't see that until we're looking in the rearview mirror. So your P&L is a great way to start. If you don't have one because you've been avoiding your bookkeeping, which makes you normal, then what I like to see people do is pull bank statements and actually use like colors, like highlights, and go through and actually see where your money went. And what I watch happen at that conference room table every day is people are shocked how much money they are letting slip through their fingers because of subscriptions they forgot to cancel, insurance policies they don't know about, et cetera, et cetera. So forecasting starts by actually asking yourself, where am I? What do I need to do with my business money? And then forecasting income is a little more challenging. We don't have that much time for it, but I would say it's simply a matter of understanding what capital you have to work with, including what your resources are and your natural energies, and looking to see what kind of growth pattern you've had historically and what tweaks need to happen so that we can see a revenue trend moving the right direction. But do not be fooled. Increasing revenue does not promise an increase of profit. Those things are not necessarily correlated. That's why we have to take a step back and look at the whole picture.
Thank you. Thank you so much. So remember, you can get lucky and make it, but you can't get lucky and keep it. I just want to thank everybody for being here. We are going to stick around for a little bit of networking session. I know that there's some questions. Peter, you have a question in the chat we didn't get to, and I have a couple of other questions that were sent in. So happy to spend the next few minutes getting those answered for those that have the time and want to stick around and do that. But I want to complete the 1 hour session. So if you need to go to another appointment, you are free to do that. I thank you for being here, and you're also welcome to stick around and chat with us as we continue the conversation for a few more minutes. Okay, so Peter, in the chat, you have a question here. In addition to reinvesting in one's business, cash flow metrics such as operating cash flow and free cash flow, provide insights into a company's ability to generate cash and its capacity for growth and investment.
Yeah, hi, Jessica. This is Peter. Hi, everybody. No, I was just really making a comment that some other helpful metrics besides the ones that have already been mentioned have to do with cash flow. And the more you can generate cash flow and increase the velocity, the less you have to depend upon outside credit. And I know we have people on the panel that provide credit, so I'm not discounting that at all. I'm just saying that if the business can't get the credit or finds it very expensive or the terms aren't great, really, really concentrate on cash flow, and that can really help your profitability and feed your growth.
Thank you, Peter. I have a question for Marissa. What is a power of attorney?
Oh, so a power of attorney is a legal document that basically gives someone else the ability to make a decision for you, or to, in many cases, make a financial transaction for you. So there are two types of powers of attorney. One is a financial, or a general, they call it a general durable power of attorney. A general durable power of attorney is the one that allows someone to make financial decisions for you. For instance, selling property, selling real estate, accessing bank accounts. And the importance of that is if for some reason you've maybe been in a car accident or another emergency arises and you need someone to go to your bank and access it and get money or pay a bill, the financial power of attorney is what allows you to do that. And you're making that decision while you're still healthy and when there is no emergency. Similarly, just medical power of attorney, real quick, is one that allows someone to make the medical decisions for you. Again, if there's an emergency, if you are unconscious, or ultimately when we're older and we need people to care for us.
Yeah, it becomes really complicated once somebody's incapacitated and those conversations weren't had. And it's really common. You know, I'm sure we all have experiences of knowing folks that have gotten there and it's like, gosh, we never talked about it. You know, we don't know. We never talked about it. So
yeah, I mean, in that regard, I almost think financial and powers of attorney in general they can be more important than having a will. Particularly when you have an older adult that becomes incapacitated. If anyone of you have ever known someone who's had dementia or Alzheimer's, and you've gone through the process of having to care for that individual, it's extremely difficult and more problems arise because of that, sometimes even than in somebody's estate.
Very true.
Mm-hmm.
What other questions? I think I got through all of the questions that I had. So we can just do open discussion. Amy, do you have any questions that you want to ask of the panelists?
Wow, put me on the spot.
I know.
Well, maybe comments. I'm pretty sure I need a bookkeeper. Definitely want to meet with Leanne. So yeah, and I have to say, I think this is one of the best investments I've done so far. Just in the short time I've been in, I have learned so much and very appreciative. So
we are so excited to have you. And you are like the epitome of what I had in mind when I decided not to return to a career and to do this and to do these groups, because so many of my friends and people I've known for over 10 years run businesses. And like you said to me, I didn't go to business school, and that's normal. Yeah. And I'm so excited to have you in this community and surrounded by these people that I just love and cherish and respect and are, operating at the top of their game. One of the things I want to add for the folks listening, even on the record, is people think, everybody's, all lenders are the same, all realtors are the same, all coaches are the same. And it's just not true. Financial advisors, there's the 80-20 rule, right? The 80-20 rule, the 20% are operating at the top of their game, and it's their profession. They're not going anywhere. This is their career. They're staying educated. They're staying involved in the conversation. They're participating in panels like this. They're sharpening their sword, right? They're constantly upping their game. And it's really important who you're surrounding yourself with in business, especially as your time gets smaller and smaller. The people that you keep closest to you really, really matters.
Yeah.
Everybody jumped off immediately after I called on you out of the blue, out of fear they were going to get called on. Mystica's the last brave soul.
That's so funny.
So hysterical.
Oh, I'm still here.
They're like, I don't want to be called on. So hysterical. Mystica, do you have any questions for the panelists that you'd like to get answered today?
I don't, but I really liked all the information that I heard. So I definitely need to, I really liked what Leanne said. She really hit a lot of things that I'm kind of struggling with right now. So
yeah,
probably going to reach out to her. So
Leanne, you're just so great in this kind of stuff. And I think I've shared with a few people when they say, I really want to talk to her, because you have that about you where you draw people in and you're so authentic about the conversation that it's appealing, right? And so people, when you say story brand, I love that, because your business has completely transformed. I've watched it with my own eyes.
Yep.
In the last decade, you transform your business and you continue to practice and you get out there and you fall and you get back up and you go at it better and you share, right? You're like, this is what I did and I'm going to come back better. And so I think a lot of times business owners, especially who aren't there, will look at someone like you and they'll say, like you were saying, they've got it all figured out. Well, it's like, I love that you share when you didn't. Because it wasn't always like that, right? You had to work at it and show up time and fall time and time again to get to where you are today. And
I have very bruised knees.
We all do, man.
You don't learn much when you don't, without failing. Failure is the biggest teacher.
It is, and it sucks, but it's so good.
It is so good. And I think my only regret, in doing this would be, and I shared with you, not recording every day a video in the life of a business owner every day from startup, every day. Because people just look at and it's like, oh no, let me show you day 83. Let's go to day 296. Like, you have those days. And I wish that I made myself get on camera every day for a little bit.
Start now.
Where I was at.
Start now. Can't hurt.
I think it would have been just a really great, I'm going to write a book, but yeah.
That's why we at the encourage people to see people like Leanne, because Leanne's already done all the failing.
Yes, I have.
So you can just go ahead and jump ahead years if you work with business coaches, profitability coaches, attorneys, lenders we've already done this for you. We've already done the failure. So let us help you be successful instead of watching you fail and do the same things we did.
Right. Yes. And your greatest enemy is not failure. Your greatest enemy is comfort.
Well, I like what you said at our last NIA meeting, where you said something about, I'm probably going to slaughter it, but the whole thing is that we're not afraid of failing. We're actually afraid of other people watching us fail. And I can honestly say that I think that the business community is plagued with this posturing and pretending, and it leaves us isolated and alone. And I actually think there's several people in the room that were there with me in a different group when the group of them said, stop talking about how you help people and start talking about the $1 million failure you had in business. If you start talking about that, then I will trust you. And you guys, I almost threw up. It was like, I can't do that. I don't want to talk about that. And I just think that the business community in Spokane can just get stronger and stronger if there's a level of vulnerability and trust and communication. And Jessica, you're creating that. It's slow going month by month, right? But you keep bringing great people to us. And if we just can be vulnerable and honest and say, hey, Jessica, I have no idea how to get a business loan. Right?
I know.
Those kind of things, if there's a safe space to do that, then we can grow and strengthen businesses here and globally. It's like such a no-brainer, but it is so hard to do.
Yes.